Hi there, very good morning to all who are joining us live on this broadcast here on Moneycontrol. You're watching Opening Bell with me, Stacy Pereira. And well, it's a Friday, so can we expect the markets to give us enough reason to make it a Friday? Well, it seems like at least after that drubbing that we saw on Monday, then we saw that, 2-3 days that we managed to snap that losing streak that we were on. And if you have to look at the handover that we're getting from Wall Street, that one also all propped up. Asian markets also taking those cues. So overall, we might end the week on a somber note because we saw that kind of selling pressure all of Monday and Tuesday. But does that mean that the bears are going to tighten their grip, or will the bulls have it their way and enough reason to snatch it back away? Well, the lower jobless claims data that has come has enthused Wall Street, and that could actually see those ripple effects here in India as well. But among all the stocks that we're going to be tracking, all eyes are going to be on that important Ola Electric IPO, and whether the street will go on to give it a thumbs up, we will know in hours from now. But also, do keep sending us your queries on our live feed, and we'll have our experts answer them through the course of this show. But before that, let me take you through all the top headlines. Now, lower than expected weekly jobless claims boosted Wall Street as the data eases worries of that labor market weakening too quickly. The Dow rallies almost 700 points, while the Nasdaq and S&P 500 clocked over 2% of gains. Asian markets are mirroring Wall Street. Indices on US stocks bounce back after that. You saw the major markets up by over 1% this morning all across Asia, whereas the GIFT Nifty too is indicating a sharply higher start for the Indian equity market. And oil prices are edging higher for the third session after US jobless claims data eased demand concerns, and also simmering tensions in West Asia further boosted prices. And shares of electric two-wheeler maker Ola Electric will list on the exchanges today. The issue was priced at 76 rupees a share, and the IPO, remember, was subscribed by over 4 times. Now, we have quite an interesting setup there for us. All through the week, we've seen different swings that the market has gone through. But yesterday, post that RBI's hawkish commentary, we did see the market slip back into the red. So we saw almost 37 of the Nifty 50 constituents there ending up in the red. So you had the likes of an Infosys, ICICI, RIL, all your heavyweights for that matter, which were pretty much the biggest drags in yesterday's trade. Overall, the market breadth then turned again in favor of the declines. Remember, the previous session, it was somewhere in favor of the advances, where you were at 6:1. Yesterday, we closed with the advance decline ratio at 2:3. So whether that changes all across today is something that we'll have to go on to see. In terms of what we're picking up from the F&O segment, yesterday, remember, was also the weekly Nifty expiry, but we did get those cues, and you saw some new call and put strikes that were being placed. Well, the Nifty PCR, or the put call ratio for that matter, that one managed to climb to about 1.04 versus the 0.88. And remember, this increasing PCR is always better for the bulls, one would say. Anything surpassing that one level means that traders are selling more put options than call options, which generally indicates that bullish sentiment back in the markets. In terms of stocks that are in your F&O ban, well, added to this ban list for today is Punjab National Bank, whereas continuing to languish, rather, we would say, in the F&O ban list is Aditya Birla Capital, Aditya Birla Fashion and Retail, Birla Soft, GNFC, Hindustan Copper, India Cement, India Intermesh, LIC Housing Finance, Manappuram Finance, as well as RBL Bank. None of those stocks, they have been there for the past 2 sessions at least, and they have continued to be in the F&O ban list. In terms of where the money flows are coming in, at least in the cash segment, we saw FIIs still continuing to sell or loosen their positions there. 2,626 crore worth of equities is what the FIIs went on to sell in yesterday's session, whereas the DIIs became net buyers of just about 577.30 crore rupees of equities, according to the provisional data that is put out by NSE. But the volatility index, or the fear gauge, India VIX, that one managed to again see an uptick after seeing some bit of cooling down in the 2 sessions before that, after that huge uptick that it's off even 50% in the start of the week. Yesterday, it rose by about 2.67% to 16.6 levels, up from the 16.17 levels. So you're seeing that slight increase there, but volatility will continue to be there for some time now. At least that's the word on the street. In terms of stocks that are going to be a buzz and those that are putting out their numbers today, Grasim Industries, Alchem Laboratories, Honasa Consumers, the parent of Mama Earth, as well as Jubilant Foodworks, Info Edge India, as well as SGV, and a couple of the names of companies that will be putting out their results. Of course, there are a whole host of stocks that we're going to be talking about, brokerages and what they have to say on the likes of an Eicher Motors that came out with its numbers, as well as LIC. We'll be discussing all of that and more, and discussing strategy on how you can be trading in this kind of market. And joining me now for that is Raja Venkatraman. He's a co-founder at NeoTraders. Good morning, Raja. Always a pleasure to touch base with you once again. But how are you looking at this Friday? Do you think we'll have reason to cheer and there will be that another attempt at recovery? At least that's what we've been trying all through this week. Do you think it will be able to sustain this time around and we can go back to those 24,400 or even 500 levels?
Yeah, good morning, Stacy. Like you said, is it Friday or Friday? We don't know, because the gap up and gap down are not supporting either of the bias. Neither the gap down is supporting the bearish bias, nor the gap up is supporting the bullish bias. So if you take a look at the entire range that got created few days ago when the market gapped down, so what really has happened is there is a 600-point range that has emerged with the 24,600 on the top side and 24,900 on the downside. So this is practically going to be the range for the next few days, which one has to factor in. So sell on rise and buy on dip approach should be the strategy at the moment. But we need to see if a higher low is being formed. At the moment, a range bound situation is what is envisaged. So index traders could look at some strategies rather than a directional play, because there is no clear direction on the indices. Between the Nifty and the Bank Nifty, Nifty seems to be much stronger, so it could lead the way up. And I am looking at Nifty to cross at the minimum 24,400 and give a closing above that to see any semblance of strength emerging. Otherwise, it's going to be a buy on dip. At the moment, based on, like you rightly mentioned, the put call ratio is suggesting the bullish bias is beginning to hold on, but it will need more triggers, and we are solely dependent on the global cues for those triggers. And as we can see, today morning, there is a global cheer, and we will also begin the day well, and hopefully we will end the day well as well. So that's what is my projection for the market. And the way it is looking like, I would wait for the next week to see Bank Nifty trickling in, because at the current juncture, Bank Nifty is unable to cross 51,500, which is an important threshold, which I believe for Bank Nifty to sustain. So these are levels which I expect the indices to hold at the end of the day. Now, when you take a look at the mid and small cap, they are also continuing to witness some profit booking due to various reasons, due to the budget reforms or due to some panic reactions. But then what I would like to suggest here is there is no need to react, because that is the main thing right now. So when you are reacting, markets are showing signs of some confusion at the moment, and I would wait a while for the next days and see whether these levels are holding, and then begin to take. Overall bias is on the bullish side, but now I would like to wait on the sidelines, watch these levels to unfold, and then take any position.
Right. So you're saying wait on the sidelines for now. It's surprising that you're saying look at the Nifty instead of the Bank Nifty. It has managed to, yesterday at least it was among the, it performed better than what we saw the Nifty do, and the components, components within the Bank Nifty also having seen some better strength compared to the other stocks, we would say, because the likes of an Infosys or an other stocks within the Nifty components did come under a lot of pressure, when an RIL for that matter. But there we are at market open on your screens. You can see Nifty there in the green, at least for now. So we are seeing that positive momentum pick up, or that ripple effect we can say that we're getting from the handover from Wall Street as well. So the Nifty 50, good 200 points there that you're seeing on the Nifty 50. 24,300 levels is what we are tracking at this point. Sensex also seeing a good almost 1.16% there on your screens you can see. So that's 79,800 levels is what the Sensex is also clocking in. So positive start there coming in, at least a good gap up we would say at this point. We're looking at the broader markets pretty much mirror that sentiment. The Nifty mid-cap index as well, good 1% of gain that you're seeing for the Nifty mid-cap. The Bank Nifty also in the positive, but maybe not as much as gains that you're seeing compared to the Nifty Sensex as well as the broader end of the markets with what the BSE small cap as well as the Nifty mid-cap are doing. So we're quite positively propped up, we would say, in trade for now. Let me get Raja quickly to give us his initial comments of, this, like you were saying, it is that tug of war between the bulls and bears at this time, but the bulls have managed to get it at least at the start of trade. Raja, these levels are something that you were also tracking, that 24,350 being a very crucial support level, and from there then we managed to move upwards.
Yeah. So if you take a look at what has happened, it has gone to the Tuesday's high, and the overall market is trying to make a recovery from here. So Wednesday's high, and it is trying to make a recovery from here. So that's why I said that 24,400 marks a very important level, and I would continue to see what it really does at these zones, because there have been consistent supply out there. So now if it is unable to hold on, then we will again witness some supply. But then if we get on on an intraday basis, for the intraday players, a 30-minute close above 24,400, it would wager a very good buy, because there will be some short covering action that will come in play, and that will actually spur Nifty towards 24,500. So that's what I'm waiting for. So as an index player, I would wait for the first at least in 945 to see if I'm getting a close above these highs, because 24,400 closing will spur it to 24,500 at the minimum.
Right. Raja, do stay on. Let me address a couple of stocks that are a buzz that we're seeing also, pretty much give that momentum to the markets, we would say, or also the ones that are seeing the street react to their numbers. Eicher, in fact, on your screens there you can see the gainers on your screens. Eicher Motors among the top gainers post its results. You're also seeing the likes of an ONGC, pretty good brokerage calls that have come out for ONGC. Tech Mahindra from the IT pack also among your gainers. So this, I think the likes of an Eicher Motors, after what we saw with its numbers, where the profits have grown by close to 19.9%, revenues to have seen a 10% increase, seems quite good. You have quite a few names from the IT pack, in fact, LTI, Mindtree, HCL Tech, Infosys, all of them from the IT. I think the whole idea of the better jobless claims data that has come is really what is helping a sentiment overall, where you're saying, okay, that those fears of a recession could perhaps be put to rest, or could be delayed for now, and which is why you're seeing the likes of IT companies, all of them pretty much, I can see at least 5 to 6 of them among, in the top gainers today from the IT pack. So TCS, Wipro, Infosys, LTI, Mindtree, you saw most of those names up there on your screen. Tata Motors as well, after all of those brokerage notes that came out. On the flip side, you're seeing the likes of an HDFC Life as well as BPCL that are making it among your laggards in trade. But let's talk about Eicher Motors, since that's the one that's up and high there. It has exceeded performance, we would say, better than expected. Although, is this enough to convince all brokerages? Well, we'll really have to understand what brokerages are saying at this point on Eicher Motors. Jefferies maintains a buy call with a target. They've cut the target price though to 5,500 from 6,000 that was there. They say that recent weakness that they've seen also in especially in their Royal Enfield segment, the volumes have been a concern. Companies should be a key beneficiary of the two-wheeler premiumization, but the toughest phase of that competition is behind, is what they say. We've seen the likes of the Triumphs and the TVSs, all of the the consolidation that happened in the premiumization segment. At least that one's behind, is what Jeffrey says. But they have still gone on to cut the FY 25-27 earnings per share estimate to just by 2 to 4%. So that is the call that brokerages still don't seem too convinced on Eicher Motors, especially what we've seen happen in the last few sessions also for the stock. Overall, though, the stock has given some bit of returns. In fact, we'll ask Raja to come in and tell us, how the charts have really, what it shows for Eicher Motors, and do you think there is, more value and play here?
Yeah, when you take a look at Eicher Motors, it has been trying to make an effort, but then it's been basically stuck in a range over the last 2 to 3 months. And I would not be inclined to get into an Eicher motor. Rather, if you want to look into the auto space, you could actually consider Tata Motors. After its numbers, the stock is showing some semblance once again. The recent pullback was, of course, part of the market regime. But then what I find is that Tata Motors is a better bet if you want to enter into the auto segment.
Right. In fact, there's also a lot of buzz, Raja, about, general insurance companies. Yesterday, we did have LIC's numbers that came out. But in general, the talk is also at the back of the finance bill, and perhaps there is this growing demand from even the opposition asking for the GST on health insurances and medical premiums. Those all be taken away or be removed or lowered. Perhaps that can happen. The finance minister has gone on to clarify that it can happen only through the GST Council. But we are seeing a lot of these general insurance and insurance companies, quite a buzz in trade of late. If you just look at LIC's numbers for that matter, their new business premiums have grown by 26.96%, coming in at 58,470 crore rupees. The total annual premium equivalent, or APE, that you tracked for insurance companies, that one has increased by 21.3%. Retail APEs are seeing an increase or a rise of about 13.4%, whereas VBN, those margins have jumped to 13.9% versus the 13.7%. Even the net profits have seen a good increase of 9.6% at 10,461 crore rupees. Raja, your take on insurance companies, and do you have any preferred picks within the whole segment? Do you think there is value there, and there is, given all this news flow, there could be pockets or particular stocks that look interesting to you?
Yeah, definitely. Yes, the insurance space is definitely attracting some attention, especially after the budget. And when the kind of sector which was never in focus a few years ago, this sector has definitely become a very interesting space in the cash segment as well as in the future segment. So like you said, LIC is definitely a good candidate, and LIC on the LIC insurance is a good stock to buy on the cash side. And the other stock which I would like to highlight is ICICI Pru and HDFC Life. So these are two stocks that are performing quite well. They have come out with a decent set of numbers, and which is indicating that there is continued growth not only in public insurance company as well as in private insurance companies as well. And the kind of schemes and offers which they are coming out with, and the kind of growing awareness for insurance in the Indian economy is definitely helping these counters. And we can see that the continued growth in the company is reflected by their profits and also amongst the prices. So these are the names which I would track: LIC insurance on the cash segment, and HDFC Life and ICICI Pru in the future segment.
Nice, nice, interesting picks that you've pulled out there from that pack. But I also want to talk about, the whole hospitals and diagnostic space. That one has been quite interesting as well. Just yesterday we saw Dr. Lal Path Labs, that share really falling by about 3%, and this on the concerns of the valuations outweighing all the positive earnings that they've been put out. The stock, though, over in the past 3 months has risen by close to 40%, and brokerages like ICICI Securities, JM Financials, all of them chose to downgrade Dr. Lal Path Labs. This reports coming in, over past 2-3 days. Though the brokerages also cited this limited upside potential due to these high valuations. Would you want to concur, Raja, and how are you looking at something like Dr. Lal Path Labs and also the diagnostic space? Are there other counters that are better placed compared to this Dr. Lal?
Yeah, so the pharma space has gone through a very good move over the last few months, rather. And they have been able to weather the storm of every kind of major pullback that we have seen. And the diagnostic space also is aligned to this particular industry. And I feel that Lalpat Lab is definitely a good stock on the future segment, which one can continue. I expect a target towards the around 4,800 within the next 1 year. And the other stock which I am tracking is Narayana Hridayalaya NH. So it has gone through some consolidation.
Okay.
I feel that a breakout is emerging above 1280 level. So I will be tracking for this level to break out, because after that this stock seems to be headed for some upside.
Interesting. Well, Raja, let's then get going and answer a couple of queries that are coming on our live feed there. Let me start off first with Cochin Shipyard. A lot of traction that this one is getting. How are the charts looking for this? Also, there is a news floor. So, how is one to be trading? If Som Mindigar wants to know whether it's a good time to enter into Cochin Shipyard.
See, the defense space definitely has gone through a lot of grind lately, and Cochin Shipyard has given a good pullback. But then what you got to understand is at this current juncture, the stocks are definitely overextended in terms of the trend. So one should be careful about holding on to this particular stock at the current moment. We should not be adding any position here, rather wait for some trends to emerge and continue to hold on. Entering at this current stage is not advisable.
Right. So Raja is saying not at this point. Cochin Shipyard, you would probably get a entry moment later. But this, I hope that answers Som's query. But let's look on further. There is Nyan Prakasham who wants to know your view on Ircon International. He has a holding of about 850 shares that he bought at 290 rupees. Short-term returns are expected at 325. So how should he go about this? Should he be waiting on till he reaches this 325 levels? What would you suggest on an Ircon International?
Yeah, Ircon has moved on, but currently the profit booking which we are seeing right now indicates that the pressure below 260 levels could take it much lower. So the immediate activity is to keep a stop loss below 360, 260 and wait for further upside. So there's no need to exit at the moment, but then one should definitely have a risk management in place.
Right. So have that risk management, because I think he was looking at getting short-term returns of 325. So you'll have to wait for quite some time for that stock to reach up to those levels. Well, let's move on then. There's another query coming in on BEL as well as Cummins. Maybe you can take one each and help the bouquet there.
Yeah. So once again, when you're talking about the defense space, the momentum is very, very slow right now, because after a very, very sharp move, the stocks are undergoing some consolidation. So it would be best to wait a while and then take further action. That's in BEL. And Cummins underwent a lot of correction lately, and the stock is once again showing some recovery here. So this will be a good point to enter Cummins rather than BEL.
Right. In fact, there were quite a few brokerage notes that had come out on comments just in the past few days after their earnings. Talking about brokerages, there's also a brokerage note, a couple of them that have come out on Gujarat Gas. Nomura has a reduced call with a target of 470 rupees per share. They look at the Q1 being below estimates, impacted mostly by that lower than anticipated margins as well as overall volume growth. They've cut the guidance to about 6 or 7%. They also see a decline in their Morbi production of 30 to 40%. Now, Jefferies too has maintained an underperform call. Target has been cut to about 450 rupees per share versus the 460 rupees per share. They look at Morbi volumes having declined close to 50% in July, and after the latest price hikes that were taken, the focus will now shift on defending the margins, and which is a concern pretty much for most of these brokerages. CLSA too, an underperform call there, target of 420 rupees per share. Standalone profits, even though came in about 6% lesser or 6% below what CLSA was expecting. The profit was below, and it has been a disappointment even on the margin front, which you could say was overshadowed by the healthy beat on volumes though. So couple of these brokerages, all of them seeing some bit of concern there when it comes to margins of Gujarat Gas, and which is why you're seeing that counter also react there down and about in trade in today's session at least. A couple more queries that I'll get Raja to take on. Of course, everyone's really waiting for Ola, so I can see our feed quite a buzz saying how should one be looking if they've got the allotment, whether what kind of premium one would seek or what we could share about Ola. Well, for now, we all have our fingers crossed, and we'll only have to wait and see by 10 o'clock when the listing happens of whether the street wants to give it a thumbs up. Remember to subscribe more than 4 times. It did see a good retail participation as well as from the anchor books that it managed to garner quite a good number. And given the fact that this week also had a couple of more interesting IPOs that were open, like Brainbees, First Cry again, from most of your startup space, one would say people were really trying to figure out where they would want to put their money. Raja, do you have any take on how are you looking at Ola's listing? Are you hopeful it will be a bumper one, or given the market sentiment, there could be concerns?
Yeah, the way the markets are poised right now, and thankful are to Ola's fortunes, the markets are positive. So definitely it will receive an encouraging response. Now I'll wait for the market to give its verdict, because I believe that the markets will give a verdict rather than me giving a verdict, and then I'll take it on from there. But at the moment, it looks like it will have a positive start, because the momentum once again has turned to the positive side. So I think that it will receive an encouraging response.
Interesting. We'll wait. Yeah, we'll have to wait and see and understand what the street wants to give for Ola. But there's a query coming in on MRF and how one should be reading that stock. Now, that there is also a brokerage note that has come out. Kotak Institutional Equities has a sell call on MRF with the target at 97,000 rupees. They're looking at the Q1 EBITDA, which was at 7% above the estimates, although revenues as well as the cost control measures is what has helped MRF, is what Kotak is saying. Though the stock is trading at somewhere around a 28 times FY26 consolidated EPS, which they believe is quite expensive. And MRF, everyone knows, is that, at one point that stock that it would be really tough for one to put in their portfolio at least. How are the charts looking for MRF, and how could we you suggest this to someone that's asking what are the views on the likes of an MRF?
Yeah, see, MRF is a stock for institutions, and I don't think that institutions are actually asking this query. So the discussion is purely from an academic purpose. So overall, the prospects are looking very positive, all right, for MRF. And after going through some lump in the last, the mid, say March to June, the trends are looking much better here. And I feel that the previous highs towards 1,50,000 is very much on the cards. So, and the play is on for the moment, and the momentum is just picking up. So overall, it looks to be an encouraging sign.
Right. Raja, do you have any other recommendations or stocks that you have on your radar that you'd want to share with our viewers that they could be looking at?
Yeah, one is from the insurance space what you mentioned. Like I have mentioned, spoke about ICICI Pru. So one can buy ICICI Pru at current levels, have a stop loss at around 730, 733, and have a target towards 765. So that will be my first stock from the insurance space. And the other is a specialty chemical industry is also doing well. So I would look to be a buyer in PI industry at current levels, have a stop loss at 4420 for a target towards 4575.
Very interesting. So you have ICICI Pru and PI Industries. Is that the two calls that you're suggesting today for our viewers? But seems like we're completely out of time on this edition of Opening Bell. There's a lot happening in the markets, a lot of cues to be tracking. But from our query segment, at least we'll try and get them answered from our experts another time. So keep sending us those, your queries, and we'll have them answered. But let me also take this opportunity to thank Raja Venkatraman of NeoTraders for helping our viewers with their queries and also helping us understand what kind of sectors one could be looking at and the themes that are at play in the market right now. Thanks so much. Looking forward to touch base with you shortly or next Friday perhaps. But for now, it's a wrap and goodbye from the entire team that puts this piece together. Thanks so much for tuning in. Do send us all of your feedback on our live stream and comment, and let us know how you'd like us to change and improve this show. But for now, it's a goodbye, and I wish everyone a really happy weekend.
Thank you. Bye.